Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
What's going on, guys? Hopefully everybody's having a great weekend. It's Brinks Trades. I'm trying to get the camera angle right. There we go. Hope everybody's having a good weekend. I'm just coming on here to do the weekly breakdowns. I know it's a little bit later. Again, I've been trying to transition and kind of do a bunch of different times, when I come on and do these lives, just to kind of see who shows up the best and the most. But again, if you guys don't know who I am, again, Brinks Trades, the resident indices analyst for the Trading Nut podcast. Every week I come on here, break down charts. And, it's been doing this for about 2 years now, so it's been a really cool process. Okay, what's going on, Hugo? Shout out to Hugo. I hope everything's been going good with you. But yeah, let me go ahead and share my screen, and we can go ahead and get into it. But again, basically what I do every week is I come on here and I break down all of the charts for what I think the market's going to do for this next upcoming weeks. And when they play out, cool. When they don't play out, obviously it's not great. But just to give you guys again, the experience of a day trader, just to break down things. It would have been an invaluable experience if I was learning. So I just try to provide and kind of give back to the trading community in this way, shape, or form. So again, I run through all the indices, right? The major three, and then a lot of the currency pairs too. So we'll start off with those. I'm actually going to start off with dollar index. So what's been going on with dollar? Let's look at this one really quickly. And again, I always say this, but if we understand what dollar's doing, we can understand what the other currency pairs are going to do, and then we should have a good understanding of the indices as well. The relationship is more direct with currencies, but it is invaluable to know what dollar's doing at all given times. So last week, what did we say we wanted to see? So coming into last week, if you guys go back and watch last week's live, I'll close these out so you guys can see. Get rid of those. I said, hey, I wanted to see the market come back up and retest this market. Obviously, the last couple of weeks, we traded back up into this inverted fair value gap here, which is a little bit lower than that, but and then trading back into a series of imbalances. Obviously, the major one here is this red sell side imbalance that is from this low to this high right there. Trading back up into there, and then obviously if we go down to the daily time frame and the 4-hour time frame, there's other levels here too, like this gap that was there. But really, the level that I wanted to really see respected was this, this zone right here, which was the combination of these fair value gaps. And obviously, over the past few weeks, we've seen the market really reject from this level. There were some really good trade opportunities, and I outlined them. I actually caught a couple of them this past week. I didn't have a ton of time to trade this past week, so I wasn't on the charts like crazy. So I missed a huge one on Euro, but there was a very series of really good opportunities here this week. So I was happy I was able to kind of come in and get something. So really here, again, what we want to see is the market really continue to head for these lows again. And so on the retest, we want to see this market potentially even retest this fair value gap and then go lower. So again, if you watch last week's call, you can see that. But that's exactly what we got, coming into the week is just a rejection from these levels. And again, if we go down to the daily time frame, just to get a little bit bigger picture of what's going on, we retested this gap here, right? So what do I want to see this week? Well, if you jump back to the weekly time frame, again, my students always know that I'm juggling time frames a lot, and I look at a lot of different things. but the main thing that I love to see right here is this weakness that we're getting, in dollar. Obviously, if you look at last week, we have rejections from these key levels. So I do want to see the market really continue on and kind of head towards this bigger target that we're seeing. So what am I looking for this week? Well, starting on the weekly level, for one, I'll be happy that we're kind of moving away from this zone because there's a lot of overlapping things there. But the main thing here is I'm always looking at a few levels. Again, the first one's going to be consequent encroachment of this wick. This is a level that I want to see the market respect. I want to see the market stay below this level. So I always will have CEs measured out there. Right. And again, as we think about power of three, obviously respecting this level potentially and then going lower. So what I'll do is I'll draw out, this level here and then taking things to the low. But if we go down to the daily time frame just to kind of get a clearer picture, oops, bring that back up. Stability, let's put that on the daily. Then jump down to the daily to just get a clearer picture. Yeah, I mean, this is pretty much the same level. I mean, I could even see us sweeping the high of Friday, right? Which would be this high right here, right? So maybe I'll adjust it a little bit more, but I'll have consequent encroachment there, just kind of measured out. But even this level here, which is the previous day's high, I don't think we'll get all the way back up to the previous week's high, which would be up here. I mean, we could. I mean, that'd be really choppy, but I think we're probably gonna just stay. We could see us retesting last week's high and then going lower. Or sorry, Friday's high, which is the high of the yesterday or the previous trading day, and then going lower. So I'll put this and I'll just make a note that says high of Friday. Oops, put text here. Previous day's high. So I really want to see if the market will sweep this and continue to go lower. So again, still bearish, right? And these levels here are going to be at 99.61 and then 99.88. And so ideally want to see these markets continue to go lower. And that's what I'm going to be looking for this week on dollar. So a lot of weakness in dollars, what I want to see. Again, the target level that I'm going to be looking at is 99.765. I also will reevaluate what's going on if we take this level here, right? Again, I'm gonna mark this. This is like first target because I want to see if the market, if it takes this level, will it stay below it or continue running to that low? So that's the first level that I'm going to be looking at. Let's go ahead and jump to euro. I think my screen is actually working for once in the first time, so I think everybody can see this. Usually I'm struggling and have two screens open or something. Let's go ahead and jump to euro. So euro is playing out really beautifully. This is a play that I've been calling out for the last few weeks, really honestly. And the beautiful thing about euro here is that again, it's just an inverse of dollar, right? Because if I throw up dollar and I throw up euro, you're going to see the same exact thing, just inverted. But the thing I love about this is that we're getting rejections from this initial fair value gap, right? We came back down, retested this zone here, and now we're still starting to make our way up, right? And so originally I called out this target level. And so when I saw the market close the way it did on Friday, I got really excited on euro because I think there's going to be a lot of momentum here over the next few weeks. And I'm looking here as my initial target or my key target, just because I don't like to over project on my trades and I want to find the closest high or low within, reason. So I want to see the market take this high, right? So that'll be my target. And I love the fact that, again, we obviously respected this fair value gap. We came back, retested it once more, and then went higher. So it's again, it's why you want to keep looking at the daily and the weekly time frames, just so you have a bigger idea of what's going on in the main things. Because, there was times where when this broke structure here on the daily, I got nervous that my idea was not going to hold, right? Especially when we started seeing rejections here. You guys might have even saw there was one week where I thought, based on this break of structure, that we could run lower at least till here. and retest this and then go higher potentially. So there was a lot of, back and forth. But again, if you're seeing confusion, if you're not as sure of what's going on in the charts, usually jump up a time frame from the time frame you're looking at, and that'll give you a better idea of what's going on, bigger picture. Um, so yeah, ideally, what I want to see is pretty much the opposite of dollar, right? So when we look at this, I want to see. There's a few levels that I'm going to be looking at. Again, I'm going to be looking at consequent encroachment. Just see if we respect that level, right? Which is right there. And then I'm going to be looking at the low. I mean, we could come back down to this fair value gap and sweep last week's low. I doubt we're going to come back down here after we rejected and then traded all the way back down to consequent encroachment and then still took off. So I'm going to look at consequent encroachment. I'm also going to look at the high end of this fair value gap again, just in case we retest this. But I think this is ready to go. Like, I think it's ready to go up this week, and we might see like a very, very early retest early in the week of these lows or some level in here. And as I jump down to the daily time frame, yeah, like same scenario, we could sweep the previous day's low, which is this low right here, and then start to go higher. But this is bullish, right? Like, don't let this fool you. This is a very bullish market structure. Obviously, if we take out last week's low and keep going lower, then I mean, it's obviously not bullish at that point. But based on everything we're seeing, obviously the market structure is agreeing with us. We had a clean run of liquidity, trading back down to this weekly consequent encroachment level, which swept these lows here. So I want to see this continue to go higher. And so I'm going to be looking at this level here. I'm going to change this daily order block to previous day's low. So ideally, if we retest and kind of take this out, then, this is where I'm going to start looking to go along, right? Looking for opportunities for the market to break structure and continue to take things higher. But this is what I love to see. I mean, I love that the fact that this, is giving us bullish structure. We had this strong wick down here. It's letting us know that this is forming a level of quote unquote support here, right? Off of this fair value gap. So I'm excited that I think this week's going to be a very clean week. It's also going to be NFP week. So this will be a good way to kind of set the month off by really running lower as we, tend to make a run higher for the rest of the month. So that's going to be really interesting to see. I think it's going to be NFP this week. I'm pretty sure. I got to check the news, but usually first week is NFP. So again, I want to see the market potentially run down to 1.03. I'm sorry, 1.3082. And then we'll go higher. Hopefully look to go higher after that. This is also a fair value gap on the 4-hour time frame here too. So there's a lot of stuff lining up as to why the market should respect this level. So I'm excited. That's what I'm going to be looking at. And I'm just going to make this a note that says, text 4-hour fair value gap. So again, want to see this run higher. We'll see what happens. And usually with the NFP weeks too, and I tell this to my students all the time, that the market usually wants to go higher on, with the NFP weeks, that the market usually wants to be very active the first couple of days of the week, and then it kind of consolidates to the actual NFP. So that kind of lines up with us having a very short, very easy liquidity target to grab before it starts running up and going the other way. So that's something I'm really excited to see. Let's see. Boom, boom, boom. So that could be really fun. Let's go to pound. Pound's actually giving us still bullish. It's just not as bullish as euro. I think we're back. Are we back? Okay, cool. Drop a comment in the box if you guys can hear me, because that was weird. I don't know what happened. I don't know if it's my Wi-Fi issues. I think I'm gonna have to upgrade Wi-Fi. I need to stop being cheap and upgrade my Wi-Fi. So let me know if you guys can see my screen, but we should be back. It looks like we're still live. So, okay, so with pound, same scenario, right? Obviously we're bullish, right? I mean, if you look at this is a very bullish scenario, right? And I love a few things here, right? So when we look at pound, we left open this huge, really big imbalance there. We did take highs. Obviously, we traded below it for a long time, wicked off of it, and then found support at this other fair value gap here. And then the market started to rise higher, and obviously we're still running higher. So this was our bullish bias playing out all along. Obviously, this was very scary to watch in real time over the past few weeks. We were wicking off of this, and failing to go higher. And again, I told everybody, look, if we violate that fair value gap there, or that Wicks consequent encroachment, then we probably will keep going lower. But we respected it, and so obviously we kept running higher. Took out this high again, which was a great sign. And obviously last week was a counter trend week trading into that. So if we look left, the long-term target on pound that I want to see taken is that high there at 1.3672. It might be slightly different if you're looking at this on Euro USD. I'm sorry, pound USD. So I go there again, same thing. But I think it's a slightly different level, like 1.365. Yeah, so it's about the same level, right? So I'm really excited about this one again, because now that we've taken this high out, wicked off of it a few times, then obviously broke through, it lets the market know that we're no longer respected or interested in this liquidity right there. So we do want to see this market go higher. So what I want to see here is a best case scenario. The market will dip down into that and take out that high. Oops. And do a bunch of other stuff too. Okay, so obviously the market comes in and takes out that high. That's what I want to see in the best case scenario. If I go to the daily time frame, I want to see if anything lines up with that. I think we could get a market that lines up with that on the dot, especially since we have all these lows here. If I jump to the 4-hour time frame, I mean, there's these clean, even lows that are sitting right here that haven't really been retested. Obviously lines up with consequent encroachment of that fair value gap. But if I make this visible on the daily and the weekly, and we go up, oh, where'd it go? Weekly. Take things to the weekly. Yeah, it's like in the middle of that fair value gap, that level too. So I could definitely see the market really running in here and kind of faking us out to start the week off, like a really heavy, just rapid trade back into that level. We also have, breaker set up too. So kind of like a break and retest. We might not even get that low, right? But this is the best case scenario for me. Is like, I want to see the market come down here and do this. If it just goes a little bit lower, like takes previous day's low, like right there, and then starts to run higher, that's cool too, right? And just takes out yesterday's like the low of the week or right there. I'd be cool with that as well. Like or yesterday, or not even as low as Thursday's low, but really just takes out the low Friday. Like I'm looking somewhere in this range for this liquidity in this level to get swept, right? And then coming back and taking things higher. So I'll specifically be looking at the low of Friday, which is 1.342, the low of Thursday, and then obviously the low of last week, right? Which just sits right above at consequent encroachment and at that level of fair value gap. It's funny that you can kind of see things line up on different time frames, the different levels that the market needs to sweep. It's going to sweep these on different time frames for different reasons, but they all tend to line up. Like a lot of times you'll see like the market, the market wants to sweep, come back down to this level, which is a weekly level, but then it also will take out a 4-hour level and a daily level too, right? So you'll see the market kind of do the same things over and over again, which is kind of crazy. Let me turn my camera back on. So if you guys can still hear me and see me, throw a thumbs up in the chat, or like just a comment in the chat. Just let me know that I'm still live, because I don't know what was happening with that, but that was weird. Actually, on YouTube real quick and see, because I want to make sure that I'm still good. Okay, cool. It looks like I'm still live. Okay, awesome. So that was weird. But yeah, anyway, so ideally I want to see the market sweep in here. Worst case scenario is 1.3343, and then taking things higher. Let's go ahead and look at NASDAQ really quickly. Actually, let me look at some of these other currency pairs really quickly. I'm going to go to yen just to see if there's anything crazy going on this week. Yen, I mean, honestly, yen kind of looks very similar to dollar, right? Like we're in this zone where obviously we've been very bearish, right? You can see these levels getting respected, and the market's still wanting to, forming almost a double top structure and then going down. So I would be looking here at these relative equal lows on yen as a potential target. See, we're getting some rejections from these levels. On the weekly level, that fair value gap that we inverted, we trading back below it, we respected it, and then we're still respecting it again. So again, I want to see the market run lower. That's what I want to see on yen. So again, same thing as dollar, right? Like I want to see if we can sweep last week's high or the previous day's high, right? And then do something like that. But I definitely think we're going lower on dollar, yen. So there should be, honestly, I think this might be a very clean week for trading across all assets. Again, we don't usually get weeks that it's very, very clear, very easy, but when we do get them, we have to take advantage of them. So let's see. So let's look at NASDAQ now. So last week coming into NASDAQ, I wanted to see a couple things. I said, let's sweep last week's low. Again, obviously if we take a step back and go to the weekly time frame, there's a lot of bullishness going on here. I wanted to see the market run higher. And I said, we're trading in this fair value gap. Even if we just go back a week, we're trading in this fair value gap right here, right? And I want to see the market, see if we can sweep last week's low and then continue to go higher, because technically we're still bullish, even though we're trading back into this range. I still have to you either have to wait this out to see what it does, or kind of anticipate the trend continuing, right? Until it shows you that it's not. So I wanted to sweep last week's low, come back in this fair value gap here, and then go higher. That's what I want. I said I wanted to see happen. We actually didn't even go that low. Again, sometimes the low end of your target is not going to be always hit, but really you need to be focused on the direction and how to anticipate, catching something if we don't get the low taken out. So a couple things here. I'm going to get rid of this bigger fair value gap just so you guys can see the daily. And I really want to draw everybody's attention to this zone right there. Why this zone right here? Because I'm gonna get rid of this just to make it less clean. Boom. Is because you guys can see that even though we failed to take this low out, we traded back into this order block right here. And this fair value gap right there, and respected all of that. Lets us know that this is a very, very strong fair value gap that could be respected, because there's an order block there. So we take things higher, and what do? We got a rejection off of that level right there. So what do I want to see this week? Well, I do want to see this respected still, NASDAQ obviously has the potential to be a lot wilder than other asset classes and like currencies. So I want to see the market do something like this, right? Again, if you're one of my students, you guys should be looking for the power of three every single time. That's the biggest thing. If you don't know what that is, then get in my Discord, get in my Discord, get in my Discord, and we can talk about it. There's a free version for my Discord. You guys can jump in there, and obviously I offer a lot of advice or updated analysis throughout the week. And then also there's the actual mentorship too that people go through that where I trade live, as well as take everybody through a course and the concepts that I talk about on a weekly basis, so you guys can see them and play them out, and have a really good understanding of them. So I actually tell all of my students that this call that I do every week is really just to confirm their biases, right, for the week. It has nothing. You guys, that's how I teach them to use this call. This isn't just the end all be all, right? This is like the cherry on top when it comes to everything that I talk about and teach. So, so this is the first thing. So I want to see the market, sweep some level of sell side, right? So, and then targets that I'll be looking for this week will be last week's high, which will be right there. Sits inside that fair value gap. The secondary level that I'll be looking at is 22,299. And if once it hits that level, I'm probably done for the week. That'll be like my main target. If we can get a run on above that level, it's about 1,000 points out. So it should be a pretty decent amount of room to run. So we'll see what happens there. But I'll be looking at least for this level. That's what I want to see hit this week. Let's see if we can get that. If I jump to the 4 hour, same idea. I think I'll really be able to confirm this once we invert that fair value gap. So I'm just looking for something clean between the low of here and the high of here. This looks very bullish, to be honest. So I don't even know if it'll come back down and take this low, but I just have it as like a best case scenario, right? So let me go to the comment section. Still don't see anybody or hear anybody. Okay. Well, again, if you guys have questions, drop them in the box. Let's look at SP. Same idea when it comes to ES, right? So, ideally, this is kind of the same levels that I have marked out, right? I love this low resistance liquidity. It's sitting right there. That's why this target's marked out there as my second target. Still want to see the market come up and grab last week's high. We did sweep the initial target that I saw there, but we traded back down into the same kind of setup here where we have a fair value gap and an order block. Again, I can draw this out. Right. So same idea. I want to see the market respect those levels and then go higher. That's the fair value gap right there. So boom. Ideally, I want to see if we can get up into this gap. That's my long-term draw on liquidity for ES. And especially if we can take out this right there. I think, again, anytime you see lows like this under a major level, my eye always goes to this level too, because it's kind of like baiting you to put stops there. All right. So that's what I'm just looking at. But we'll see. Let's look at YM. which is the Dow Jones or US30. A lot of stuff on this chart. So let me clean this up. So same idea on YM, right? Again, the structure is very similar. Obviously, indices move very similarly. This one looks very clean. Again, we swept the previous day's high coming into Friday. All of them have this same signature in price, which is this fair value gap being respected. This one even has another level right there. I want to see something, best case scenario, we sweep these lows, take things higher. And I'll be looking at, instead of that low resistance liquidity run that I mentioned, it'll be this high right here. Why? As kind of like the ultimate target. I'm gonna call it secondary target. My first target will be last week's high, again, buy side. So that's what I'll be looking for this week. Pretty much a continuation of the same play that we talked about last week. So again, that 43,164 on YM, that's 5 or 6,000, about 6,000. Let's call it 6,030 on ES, and then NASDAQ. I'll be looking for 21,877 and then 22,259. And once we hit those levels, then I'm done for the week. So if we take those out, awesome. If you guys have any questions at all, let me know. Sherry says, did I miss NQ? Let me go back to NQ, Sherry, and see. So we can talk about it. So basically, again, on NQ, and I'll run through it really quickly again for you since I got time. What I want to see happen is the market continue to respect this fair value gap there. And I know there's a lot of junk on my chart, so I'll clean it up so you guys can see. But we're respecting this order block right here. What is this? There we go. We're respecting this order block right here, right? So I want to see the market continue to run higher. And this fair value gap. So again, best case scenario, we'll sweep this low of last week. In the best case scenario, it doesn't have to go as low as this, but it's just a clear, easy level of sell side that I want to see the market run and take before it starts to think about going higher. You could also look at consequent encroachment of that wick right there. The one thing, as I was looking at the weekly time frame just a second ago, the one thing that I am watching though is how we ran above this fair value gap, kind of cleared out these last 2 weeks high, and then still stayed in above this. So really, to be completely honest, I don't know if I want to take a trade until the market really takes out consequent encroachment of this. So I'm gonna look at something really quickly. This level doesn't really. Actually, yeah, I don't like that. I'm gonna stick with the bullish bias for now, but I don't like, and this is why you have to analyze on a bunch of different time frames. I don't like the fact that the market has a hard time breaking through this consequent encroachment of this fair value gap right there, and this long wick on the weekly could want to send prices lower. So let me say this. I'll go back through each one of these, and I'll say I'm gonna call last week's low kind of like my fail-safe level. If for whatever reason we see the market come back down to 20,725, then this bullish idea is going to be invalidated, meaning I don't think it's going to play out. I have to kind of stick with what I'm seeing as of now because there's not really any weekly breaks in structure. We've had a rejection from a key level that the market wants to respect. So I have to kind of stick with this bullish bias here for now. But if the market really takes out each of these lows, again, on NASDAQ, that low was 28 or 20,777 on ES or the S&P. That level is going to be that fair value gap right there. So that 5,760 level. Again, I'll make this zoom in and make this cleaner for everybody. If we take that low, this is going to be my fail-safe level. That basically my idea is invalidated, and either I will be done for the week because I probably will have taken a couple of L's until then, or I will look to kind of adjust and go low and start going lower. But I'm going to stick with my bullish bias for now. And this again, whenever you're trading, you want to have a level that kind of invalidates your setup, so you're not continually chasing longs or shorts, right? If the market's trading all the way down here, then you shouldn't be looking to go long still. So that's the level that I'll kind of mark out as like the kill switch, I guess, on my idea. I'm gonna get rid of this one too, just so you guys can see better. Same idea. 41,232. If we take out that level, that's very clearly a break in bullish structure. So I don't really want to even mess with that. So ideally, that's what I want to see play out, is the market really respects this respective structure on the daily on all levels. I mean, each of these assets had the same idea: NASDAQ, ES, and YM. They all kind of have that level there. But they all kind of give me a little kind of, I wouldn't say a fear, but like hesitation, right? Even with YM, you see those rejections from the top. So even though you have to kind of stick with the bullish bias idea because it hasn't really fully broken structure, even though this is kind of a level of quote unquote resistance, you kind of want to be careful. So again, if we take out this low, then that's gonna kind of make me put the pause on. But ideally, again, I'm still bullish on everything until that break of structure occurs. You got to see it through. So shot trade MNQ futures, awesome. Yeah, MNQ is it's all the same. I mean, MNQ and NQ, they're the same chart. It's just different, different contract sizing. But yeah, so that's pretty much everything. So if you guys enjoyed this, please let me know. And I will drop a link. I actually want to drop a link to my website, which is talentedtentrading.com. So I'm going to drop this link right here so y'all can check it out. If you're already a member, cool. If you're not, it's a free resource. But again, you guys can go to, I dropped a link in the comments, but it's talentedtentrading.com. I'll pull it up right here so you guys can see. But again, this is, pretty much, my website where you can join my free Discord right here, obviously, or if you want to be an upgraded member here too. Basically in the class or in the mentorship, you basically learn, my trading style. We get, obviously trade alerts as well as real, risk management, tactics, as well as psychology and discipline. Less on the trade alerts and more of the live trading sessions. And as well as a Sunday call that we do with everybody in the community, just to kind of really talk about some of the things that we struggle with as traders or where you're at in your journey. And right now I'm really starting to employ a lot of risk management stuff because I'm learning that a lot of the students that I teach and a lot of the traders that I come across, they understand strategy. They might understand, how to, win, but they don't understand how to lose, right? Or how to manage their emotions in trading, right? And so spending a lot of time on managing that aspect of traders, both with mental kind of like techniques as well as like stuff that will actually lock yourself out of your account if you start to have too bad of a trade. So like a lot of these processes we put in place just to kind of make sure that traders protect themselves and most importantly protect their accounts, because at the end of the day all we have is our account, right? So we blow that, then we're done. So and you can only blow so many fundings before you either run out of money or just get tired of doing this. So yes, that's one of the things that we talk about a lot. So again, if you guys are not, in there, go ahead and check that out. But it's talentedtentrading.com. And yeah, I mean, I think it's helping a lot of people. There's, I've had a lot of students have a lot of great days in there so far, and just want to keep growing the community, keep growing what's going on in there. So this is going to be the new wave of trading, and hopefully, we can continue to grow this from here on out. So if you guys have any questions, I'll stay on for a couple of minutes. But again, if I had to rank the setups going for this week, going back to the actual charts, I think Euro and GBP are going to be the setups that I'm going to look at closest this week. I'm going to start incorporating NASDAQ back into the actual live trading sessions and kind of paying more attention to those on the day to day. Last few months, I've really only been trading NASDAQ on these calls or calling out NASDAQ on the calls, but not actually taking any positions on it. So I think it's going to change in the month of June. But for this week, if I had to rank setups, I would be looking at Euro first, probably Euro first, then GBP, then USD JPY, and then I start looking at the indices only because we are sort of at an indecision point, right? With that level that I called out with it respecting those, even though I do want to see this market continue to go higher. So again, I'm still bullish, but not as 100% locked into that idea as much as I am as what's going on with Euro and the currencies. So I would love for this to play out like this, but I can see how it could fail. And right, obviously that's why I marked those levels out right there, just so everybody has a clean like cutoff on that idea. So that's what I'll be looking for this week, and hopefully you guys have a great trading week. And yeah, let me know if you guys have any other questions. Peace. Oh, and also message me if you guys have if you do have any other questions, find me on social media. I always respond back, right? Even in the comments of these videos, I go back and watch everything. So, you always can reach out to me. I'm a real person. You don't have to just say things on these calls, but Brinks Trades is my social media presence. Hopefully you guys are subscribed to my YouTube account, right? Because then this is hopefully where you're watching this video right now. But if you're not, go to Brinks Trades on YouTube. You'll see this video is also being shared live there. All my social media, Brinks Trades. You should be able to find me there. So hopefully everybody has a good trading week. And yeah, I'll catch y'all next week. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450K in funding. The best part, you keep 100% of your first $15K in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.